Mess with fire, now it's closing in. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So we actually wicked up into that 0.65 level of the diagonal pitch fan to the upside projected path, wicked down into the 618 closed candles, and we are working on our diagonal ascending channel way up in this 618 zone. Are we going to see a retrace down into some of these regions? This bearish trend-based fib level has now been negated, so we can delete this bearish trend-based fib. It served us well for the last month and a half. So are we going to come back down into this 0.5 equilibrium level of this diagonal pitch fan range? It would make sense to come back and try to test support and make a cup and handles type idea as you've reached the top of the range here. And we'll go into the liquidity to see what's happening with that. What is high block capital? Well, people lock their liquidity in the charts to get burned to a crisp by the market maker, and we get to see where those people without a stop loss, their carcasses lie burned to a crisp, and we get to see where those crispy characters lie in wait. So let's go see where those crispy characters are. So as we gave you the update earlier today, we said that we would probably come back down and then come back up, and then that pivotal point, we'll get there in a moment, is about happening now with the New York opening as they ping the liquidity. Previously, we had seen a stab to the downside, which pinged in these $300 million characters on these 150 and 25x projected regions, and they came back to take both the 50x and the 100x characters.
Fatality.
And the 25x characters are still on the table up here, and they started to ping some 100x longs and came back into those characters as well. If we go into these zones, what was that region that we just came up into? We came and took out some 100x shorts, came back, took the 100x longs, took the 100x shorts. Are we coming back for these 100x longs? Overall, it looks like they are pinging more longs here, 65 million, 57 million, 32, 36. So there's more long interest than short interest at this time. Are they going to come up to this region up here at the 35, the 413 region to take out these 50x and 100x or 250x pools up here for 148 million? Or are they going to ping more longs to bring the demise to the longs here? As it stands currently, there is a thicker region down here in this region at 29.4. I would say that coming back into this liquidity, at least for a stop hunt rise, if it is going to continue to the upside, they would likely be getting fatigue off these liquidity guys that they pinged in here. So coming down to this pool at 29.211 would put you in this nice juicy meat of the matter here. Granted, you do have 50x pools which are up in this region of shorts, and you do see some broth that is thin down to the downside here, suggesting you could come up into this 30,441 level first, or all the way up to the 310 million. Let's go to the higher time frame pools to confirm as we expand our vision to the external liquidity range. Shout out to everyone here. Let's go. What's up, Smart Data and Brett Moore and Rainier? What's going on? So on the 12-hour time frame, it looks like we have pinged more shorts than longs in the last 12 hours, although it is kind of even Steven. Let's go to the 7-day and see where that lies as we expand our vision to the higher time frames. So on the 7-day, we've given the shorts a run for their money, literally, and grabbed all of these shorts. We weren't even thinking this high. We just saw the imbalance up here at 27,350. We grabbed that and then some with the fury, and we stabbed into the external liquidity pools beyond this. So as it stands now, you're starting to ping more longs to shorts on the 7-day time frame. Do we see a retrace to scare out the people who are in profit, to at least get them to pay themselves? I put out the projection earlier today that that could be the case. Let's see what's going on here on the monthly time frame. Monthly time frame still has more in double digits up here at 31.6. Could we come up into the 31.6 region? If we come up into the 31.6 region, that would put us up here well above the resistance, coming up above this daily resistance zone. A lot of these daily support / resistance zones are in this region. This is the only ones, the support lines you'll see on my chart are the daily ones, and so these daily ones are what we met with resistance before, wicking off that region there. So we would have to reclaim that and come back into this. And part of the beauty of having the pitch fan here is it kind of gives you a projected path of where your premium levels would be. So right now we're at the 618 premium, so coming back down to equilibrium here would be reasonable at 28,735, and then if we come back into that, we could springboard back up to the 618, and then it would take time. So it's the projected path of this diagonal motion over time. Similar fashion, we came up to the 618, came to the 0.5, refueled down at the 236, came back to the 618, 0.5, and this is what a mean reversion idea looks like with this pitch fan, where the middle line is your mean reversion and you have a bullish trend-based fib and a bearish. If you're going to revert to the mean to the upside, you're going this path, and so we've got it trapped in this nice little path to the upside. So the 618 could bring us down to the 0.5. That would make sense after a move like this to start to come back to at least equilibrium of some nature to take out some of the liquidity. Well, how much liquidity do we have on this 1 minute time frame? Well, this is $28 billion in long liquidity imbalance waiting to be taken. So people that don't pay themselves get knocked, scared out, or better yet, liquidated. So let's go see where the other pools are on the higher time frames of the 3 month and how much of that we took. We did give an update earlier today in case you missed it for the Asian session. I was deadbeat tired last night after spending so much time in the charts. As it stands right now on this, we have 75 billion down at 24.2, which was got thick over the last few days. 10 plus billion brought in over the last few days, and we got 67 billion, just a hop, skip, and a jump at 31.2 on the external liquidity pool. So if they're not done targeting the upside, then this is where they would take it to 31.2 and possibly even higher, but 31.2 as a conservative target on this 3 month time frame, because you're seeing a large pool of liquidity up there, 7 billion induced in that region. If we go to the 6 month, we'll see a different story. As we expand our vision to the external liquidity pools, we see that there's more to the downside, 100 billion targets down below, and all the way down to 22.5 that we left some divergence after we spawned some divergence, taking out these $200 billion in long liquidity to the upside. So as we are in this new repricing algorithmic model, we could be coming up to the 32.1 region with the 94 billion up here at some stage. So are we going to retrace into some of the 100xers so that they can get the refuel to come back up? That would make the most sense over time. Let's go to the 2-year time frame. 2-year time frame does show a large pool up at 32.4, which we've been pointing out to you over the last few days as we started to see a potential shift in the narrative, and we said this is the higher liquidity pool, although now it's equal in value at the 24.4 region. If you look up here where we are, there is that path narrative to 34K and beyond. Up to 34.8 has $100 billion, and this entire path in those triple digits leading the way. You have 31.2 with 52 billion and 118 billion at 31.6. If they have them hook, line, and sinker in this region, coming back to retrace just to take out some of the high leverage traders would make the most sense at this time. So where do they go back to? That is the question. Let's go back into the monthly chart and then head into the Binance chart. All right, so what did we put out for you earlier today? Let's go and take a look. So what did we see? Well, we saw stuff on our oscillators, so we'll spare no delay and just throw those on for you. Heads up display on. What is this? Link in the description for more, momentummaster.info. Scroll down to features, toggle the entire suite if you please. And then if you'd like to read about each component, you can see that as well. So what were we seeing? Well, this time we were seeing the most prominent feature was the cross down event in conjunction with the cloud thinning and giving this preemption of a fatigue zone. And we projected a path back here from Friday. We talked about the Asian kind of pump before a dump handoff to London. They didn't really dump it as far as I thought, but then they rose it back up to the region I thought they would. As I was at work, this was occurring, and then we said we would look for this fatigue on the cloud, which seems to be occurring as well. So this is how, if you don't have Momentum Master, you'd be clueless as to what this price action consolidation means, but with Momentum Master on, this heads-up display gives a quite different impression with this trend cloud. What is the trend cloud? A volume weighted cloud formula which expands and thins according to the amount of volume present in the asset. Price tends to gravitate and retest the cloud as a point of resistance or support. Thick clouds represent strong trends. Thin clouds represent weakness or consolidation points. Keep in mind, when the cloud thins, a potential expansion or reversal is in. So we're starting to thin here, and so this potential expansion and reversal is in, and we haven't changed a thing since about 12 hours ago. So this is why things happen the way they do with Momentum Master Suite in hand. So if we go to the 4-hour time frame here, we will see the crossover event has been confirmed with the baselines above the price. What does that mean? We went over that earlier. Well, it's your first sign of reversal. It's ultimately a scalper's dream because it translates to all time frames. Shout out to all the funded traders out there in the group. And yeah, so that's what helps take you to the promised land, and we're seeing this suppression off the baseline on the 4-hour time frame. Also, we talked about the 6-hour crossover event occurring here, and it did confirm as of 9 o'clock. The last 6-hour candle confirmed the cross down event, so you're starting to see this potential suppression of the 6-hour as well. So the 4 and 6 hour you do not want to battle against, and even if you are looking for a scalp long, you're starting to see the 12-hour thin boy baseline lead to the narrative of a potential suppression to the downside, which is why we are putting out these ideas in advance. If you look at the 22, we're making our ascent this time. 22 also above the price action, giving the impression of coming down a little bit further. All right, let's see if things change. Let's just go up to the daily time frame and make our narrative structure. So also we had this projected path to the 30,375 Hail Mary play up to this region. We went a little bit higher than that, but these trend-based fibs will have you at hello if you decide to ever use them. How do they work? Well, they are rise, retrace, continuation, or impulse, retrace, continuation ideas. How do they work? Well, you go to your fib tools, you favorite the trend-based fib extension level, and if you're doing a downside projection, you do the impulse to the downside as such, and then the retrace as such, and then the math will project out into the future as such. We'll just scroll up to a region where there's something to show in more detail. So yes, so we'll do that again. So basically what you do is you take the impulse to one direction and then the retrace in the other. So based off the strength of the impulse and the weakness or the strength of the retrace, it will project your math into the future if it chooses to continue. And then where's your continue idea? Well, you look at that entry on the 2, 3, 6, and then you look for some sort of take profit or resistance at these levels. And then ultimately you're aiming into the golden pocket of this region here of the 1 to the 1382, and then you have some Hail Mary plays down here. This is how the trend-based fib extensions work for me, and they have worked quite well thus far. And we'll go back and show you how that worked with that projection to the downside and why we're going to delete it now, because it's basically finished. It did its thing. So if we go to, sorry, let's delete this. This was an old one. Don't know why that's there. Weird. All right, so if we go back in time to here, to Tuesday, April 18th, and then basically to Wednesday, April 26th, we have this impulse to the downside, this retrace to the upside, exactly what we just did as an example for a bearish trend-based fib level. Now, we also went over at that time on the live stream the 236 entry on Saturday, May 6th. If you cross beneath the 236, we said, then you can look for a short idea, and thereafter, boom, we went to the 65706 region. We consolidated for 2 days. We had some wickage in both directions, but eventually the trap door at the institutional 706 region was opened, and boom, we went back into the golden pocket. Then we started to see some ideas of coming out of here, and we said if you cannot break this bearish trend based fib, the super trend, then you could expect more downside to occur. And we came back down for some divergence of the 13822 and those external pools. The Hail Mary play did not play out, so those are basically gone, and then we spawned the divergence and shifted out of here. Okay, so that's gone. We can delete that now. It's all in the past. We have negated the 236 now, so it is gone. It is a good served area. And then also here we had an impulse to the upside and a small retrace to here and then if you go to a lower time frame, you can see this. Let's just do the 12-hour. And this was a bounce off the cloud idea. You have this impulse to the upside, the retrace to the cloud, consolidation for 12 hours, and boom, we were gone. And this is your 236 entry. When we held that 236 at 26,737, it should have told you that we are projecting into this region, as we did, and boom, we went all the way up to the Hail Mary 2 play up here. So this is, conservatively speaking, you'd look for this idea, and I've seen this occur so many times, which is why I use these for my measure moves rather than poles. If you did the pole, it will take you to this region up in this golden pocket, but there is so much more detail when you use the trend-based fibs that it's only 2 clicks away at your disposal, that it makes sense to do something like this. It's not complicated. You only complicate it if you don't take the time. And there you go. And if you don't have the time, if you don't make the time, you don't have the time. So take the time to check this out and copy as you please. All right, so that is the trend-based fib level. We reached into that zone, and those can become potential retrace regions or stop loss into profit areas too, which have served me well in the past. So now, if we are going to look for some potential downside path, what are we going to look for? Well, we can look for an impulse retrace idea out of here on a smaller time frame with these smaller projected paths. So why don't we just do something like this? We just take a look down into here, and then we see where we come back into this region. All right, so if we break beneath the 30,028 region, then basically the short could take you down into these zones on this smaller time frame play, and with the ideal zone being down in here at the 29,277 region. We have some other pools marked off from before on the 1 minute time frame, but ideally this is what we are looking at here for a potential shift in cloud structure. Although holding above the cloud, ideally a struggle would ensue with the cloud over the price action like this, so this could be an SR flip of the cloud to continue higher, so we will see about that. I'm going to remove this bearish trend-based fib because this is not as clean as I would like generally, but that's how they work. I would like to see a stronger impulse. This was like impulse, retrace, so this is kind of not the cleanest structure for that in my opinion. So we're going to just leave it as is and look at the cloud and see how the prominence of the cloud has come to fruition with this basic shift in the cloud structure. Now, if we go to the 4-hour time frame, what are we going to see? So we're at the outskirts of the Keltner channel. What is the Keltner channel? It's an ATR-based Bollinger Band type idea, dynamic support and resistance. Generally, when you come outside of the Keltner channel, you tend to come back into it. So coming back to at least retest the outskirts of this Keltner channel, which you have come so far beyond, is a normal thing to do. Well, maybe you don't believe me. Well, let's go back and retest that theory. You come out, you come back in. You come out, you come back in. It just happens over and over again. So if you do happen to spike out of the cloud or out of the Keltner channel, you tend to come right back sharply. And in the same way to the downside, you come out, you come back sharply. So this is just one little area of confluence. If you come out of the cloud, you tend to come back, or come out of the Keltner, you come back to hug it. And then if you see these ascending channel rises, it's like a comfort zone, a pacifier, if you will. My friend likes to look at it as like a living organism, and it's the known territory where it likes to feed on liquidity, and when it comes out here to feed, it feels a little bit uneasy, so it likes to come back into the 𝗥𝗲𝗃 channel. So seems to make sense to me, although how hungry are they for that external liquidity is the question. If we go to the 6-hour time frame, we are also outside the 𝗥𝗲𝗃, which would put you down in here at the 138.2 of the bullish trend-based fib. And yeah, so we're at the outskirts, so seeing a simple retrace would be the idea to think about. We're closing potentially in 3 hours beneath these baselines on the 8-hour, which sets the path to that as well. So they're definitely railroad tracking a cord of tracks trying to ping liquidity into the charts. Let's see if we can get a gauge on who those characters are. Let's say what's up to everyone here. Yo, 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 Dingo, what's going on? All right. So we're pinging more long liquidity yet again, not looking really like a smart play for the longs. So if you look here, we pinged in 57 million more in long liquidity off that break to the upside, and we didn't ping in any new shorts. No shorts are taking the bait just yet. I would expect something more fruitful to occur in the next 30 hour and 30 minutes. And then you'll see more liquidity coming into the charts, although I can only be with you for the next 9 minutes, and I will get ready for the New York Open. So what we are looking for, although this is holding the cloud here, is a potential drop to retrace into the liquidity here. If you're a patient camper and happy to look for more divergence, where is another place to think about? Well, you could think about if you see it go up to 30,753, then it safely knocks out all these 50x characters and some of these 25x, and the thickest band starts to dissipate at 30,956. So if they do one last stab up to the 31k region, they could, depending on how much they ping in longs, they could do a sharp decline at that time after knocking these characters off the table as well. If you're able to handle drawdown and you have a projected entry and exit strategy, then you can enter whenever you feel ready. Not financial advice, all up to you. But yeah, let's take a look on the lower time frames as we see some stuff enter. Ambiguousness on the 15-minute as we start to reset here on the oscillators. Williams as well. Cloud holding as we came back and kissed it. We broke through, kissed it on that. I'm going to remove this now. It's getting obscene in my face. And we have this idea already out to you, so we're going to remove that for now. I'm going to reassess after I get off air, but that cloud idea is still intact, and that's where I'm thinking it's going to go as of this moment based on my oscillators and liquidity. But as we see, there's currently holding the cloud, but the cloud is not as thick as it was back here or even here. So we saw this player exiting in this cloud, and so this was a positional player exiting stage left. And then now are we seeing some player exchange manipulate the price, leading it up to give the impression of going up higher. It's not exactly full of conviction because the cloud is not so thick. Here was a better example of where you would see like a bearish retest drop to the downside. This is a kind of reclamation trying to continue higher idea, although you still have just essentially gone sideways. So that's about it. Let's go take a look at the DXY and the NASDAQ, and then we'll bid you adieu. So we talked about coming back up to this region. I believe that's why I have this here, and then we did. So we did double bottom and come back up after hitting the Hail Mary 168 of the bearish trend-based fib using the same theory we just talked about. 236 entry, meandering around the 65 to 786 region, came down into the golden pocket, now bouncing around the Hail Mary double bottom idea. Are you trying to see like a continuation out of here? Is this going to come back and try to hit this as a W formation, cup and handle out, and try to reclaim some of these levels? You're getting a cross down event on the hourly, which is implying that you dump more on the hourly for the DXY. So that looks like you could be seeing some more downside. The 4 hour also seeing a sense of consolidation or rejection coming down into this. So you'd be seeing some sort of projected path down into here, or maybe even lower. Essentially, we're going to just take you down to this point for now. And seeing the 4 hour dump is suggesting you come down lower. If we go to the 12 hour, also getting overbought, you do have the crossover event possibly coming up here. So what type of consolidation do you see coming back into one of these regions here? Potential rising sun on the 12 hour for the dollar. Let's see what the S&P is looking like. Getting a breakout event, continuing even higher for 4,452, so we're going to get a gap up by the looks of it. Okay, so we're going to gap up into this region that we've had as a fair value gap since about April 19th, 2022. So we're coming back to 2022 levels last year for the S&P. When we gap up, this is the futures data, which is not yet updated, so you're getting a sneak peek of what that will be. And so we're likely going to gap up into this region, so that could send, although Bitcoin doesn't always correlate these days with all of the strange news going on, but we'll see. I was even seeing some SMT divergence the other day, where when this went down, Bitcoin went up, and when this went up, Bitcoin went down, like some players were shifting assets between the two. So now that there is a futures market for Bitcoin, it's possible that BlackRock and these other companies are playing one off the other now. So we could see some interesting moves with how stocks operate from here on out as they shift funds between the two. Well, ladies and gents, that's my story, and I'm sticking to it. You got the cross down on the 6 hour and 4 hour. Does that coincide? Does that start to cross over to other time frames is the question. Are you going to see an extended M where they like to bring it up before they bring it down? They could do that as well. So always have a plan in both directions, and I will catch you on the flip side. Thank you very much for stopping on in. I will bid you adieu at the next 3 minutes. Let's watch how this hourly candle closes together and see what you guys have to say in the chat. Alright, so let's go back to here. Just essentially 4 hours of consolidating here, attempting to make like a kind of bullish pennant of sorts. Remember, the Mario flag is not necessarily your friend. Essentially pinging the liquidity on both sides here. Let's see who else is entering the charts. Nobody else new, just these little pools here and there. No new shorts. Just looks thicker to me down in this region. 29.2-ish on the 1 minute. I mean, and then you undeniably have that $30 billion, $28 billion to grab. Do they go up to go down is the question. You do have the cross up event, and the price is holding, trying to give the hourly its due. By the way, if you're interested in trading the NASDAQ futures and all that fun stuff, all these links for the discounts, Apex is doing a 90% sale right now, so you can get it for like $18. I just picked up 5 evaluations to run me through to the next month. So it's relatively reasonable, and it's a good way to think of it as a risk management video game. So if anything, it will make you a better risk manager, if nothing else. So something to consider. Alright, so we had previous bearish divergence that it looks like started to play out, but then got bought back up. The money flow did come beneath the RSI here, and we're starting to make our way up. We are holding the cloud in a strange manner here, which is suggestive with this hourly cross up that we could get a stab up into some of these liquidity pools. So we could go a little bit higher and look for some bearish divergence on these for that to come down. Currently we're pinging more longs than shorts, so a fatigue after taking out whatever pools they're aiming at first could be in store. We did hold this cloud as an indecision doji, spinning top kind of deal. The KD line's looking mighty weird right here on the hourly time frame. We'll do one last recap. 4 hours starting to reset here. We did talk about that from earlier update about how sideways price action with the reset of the stochastic RSI does suggest some bullish play, perhaps inbound. You are getting overbought on the Williams, but this is holding the alarm bell from sounding, and you are kind of coming down in a nice manner. No bearish divergence just yet on the money flow or RSI. The money flow is coming beneath the RSI here, and you got 3 hours for this candle to close either way. So does this get suppressed by the Williams and the higher time frames and the baselines, or do we bang to the upside some more for this Friday run for profit of New York? Only time will tell, and you saw earlier where I think it may lie based on the cloud until we can make it beneath that 30,036 region, and beneath this cloud maybe there's nothing to think about just yet. Just observe. You could be shoulder, head and shoulder out of here too. Ladies and gents, that's all my time for today, so I will catch you on the flip side. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in. We'll do the same, bringing the fire, the accuracy, the precision, and all that fun stuff. And we will catch you on the flip side. Please trade safe, and I will catch you tomorrow. Peace.